Wealth Hammers, welcome to Bloomberg. The superlatives fly in these numbers in terms of wealth management and investment banking. But I want to get a sense from you as we get into this quarter, any sense of pause, any sense of levelling out across the business?
We had a really good set of numbers this quarter, and there's a couple of things here. So on the income side, we grew income by 21%. The cost increased by 10%. The profit before tax came out at 2.6 billion, which is a record quarter result. And it's really on the back of strong commercial momentum. So clearly the markets are positive, but beyond the markets, the way we deal with our clients, I talk to clients all the time, they need the advice. They're coming out of COVID, they are coming out of lockdown. They want to know, do I have to digitalize more? How do I build my scale? Do I have too much delay on my investments? Do I need to acquire a company? And it's all of that activity that you see both in the markets as well as in our banking activity, in our banking operations.
And certainly on the M&A side in the investment bank, I think it's your best quarter ever. What is the pipeline like? Where are you strongest in terms of mandate winning on the M&A business?
It's literally across the board. Over the last 6 to 8 quarters, we've truly focused on a couple of sectors that we wanted to be our sectors, the TMT sector, the industry sector. And what you see coming through is that focus, and I've been pitching myself in a couple of cases as well, and that real care for the clients and helping them to find the right candidates to acquire or to find the right way to issue capital. It is that what's paying off right now. And we're actually gaining market share across the board, specifically also in the EMEA region.
Is there pent-up desire to do deals?
Yes, there is a real desire to do deals, but there's also a necessity to do deals because I think that most companies have been standing still, and we had to stand still in the pandemic. And when you come out of the pandemic, you make your new analysis, like we did it as well. You know, like I did it as well in the first quarter. And all the CEOs are now looking at, okay, guys, where is this world going, and where do I take this company? And then it's always a combination of organic improvement opportunities and inorganic opportunities as well. And that's where you see a lot of the demand coming from at this moment.
Bond yields, as I went to bed last night, were trading at 1.2%. Now that screams something to me. But what does it say to Ralph Hammers?
Well, what it says is a couple of things. First, we already saw that that the inflation risk is not as real as it was perceived some time ago. And we've been saying that. We have said, well, this is transitory. We see the inflation coming from a narrow set of goods and services. That gives a bit of pressure. The supply chains are not working yet. And even at this moment in time, you see countries going into semi-lockdowns, economies semi-opening up. And the global supply chain is not working exactly as it should be. So that's one thing. So you see a bit of inflation there, but it's transitory, so it should not be a real concern. On the other side, we still see a lot of liquidity in the market, and that's where I think that's also very much influencing the rates at this moment.
So you're in the transitarian camp, but do you worry that the Fed could have an accident of where they say taper and the market assumes tighten, as in rate hikes?
Yes, exactly. But you know, I actually think that wherever the Fed is going, what we believe should be the case, and what we believe is our base case, is that rates will stay low until at least the end of 23. We don't see rates, also not the long-term rates, really going up.
What are the clients most worried about? We're talking about Delta every day. What are your clients most concerned about?
It's not so much that our clients are concerned. They really need advice. Every time I talk to clients, it is about, okay, is this the moment to further invest? Where do I find my yield? If I look for yield, which are the asset categories that I should consider? And that's where we advise. And we see the primary markets, the private markets still hot. The alternatives in general still interesting. Still the theme of sustainability, investing for return, but certainly for impact. It's still a category that is in high demand for with our clients. So it is really guiding your clients through the options they have. And what you actually see is that the optimism is increasing. So there is still continuing optimism around the future with our clients.
The American banks are preparing for crypto exposure, whether it's funds to their wealth management clients, whatever. What are you doing in crypto? What are you going to do for the wealth management clients in crypto?
It's a very good question, Manus, and because clients are looking at different alternatives and they hear about crypto and there is a bit of a fear of missing out as well. They read it in the papers, but they also see the volatility. So honestly, we advise with caution. We don't offer it actively, so we advise with caution. We feel that crypto itself is still an untested asset category. And so if you want to speculate...
You've no FOMO as a CEO that maybe you're going to miss out a few millionaires and billionaires?
I never have FOMO. So, because I'm determined as to what I want to do. And it's also about focus. And there is always these things that you hear about, that maybe this or maybe that. But I've really learned in my 8 years now as CEO of almost 1 year and 7 with ING, that what is important is, guys, this is the story, this is what we're known for, this is what we do for our clients, and that's what we have to continue. Let's
finish off with work from home. It's a work in progress, so to speak. We understand 2/3 will be offered a mixed, a hybrid solution. What does that really mean for the investment bank? What percentage at all of the investment bank can really work from home?
I think also at least 2/3, honestly. So what you see is a hybrid way of working is here to stay. It was accelerated because of the pandemic. It was already coming in, right? It was coming into all of the industries, but it's here to stay.
But could you see traders? Could you see traders and salespeople?
No, but that is, so the traders are clearly part of the 25% to 1/3 of the roles for which it is really difficult to have them work from home. But beyond that, there is 2/3 to 75% of our roles that can be performed in the mix of working from home and working in the office. Our clients like it. Our clients have also experienced that they don't want to always come to the office in order to meet our people. They don't mind online advice, so now and then as well. So it's both on the client side as well as for our staff. It's a new way of working. It is here to stay. And I think it's also better in the end for work-life balance.